Welcome to Allenberry Reports TV. I'm your host, Allenberry Labucan from allenberryreports.com. I first started investing or getting interested in the market in my teens. I was one of those kids that actually loved math, and when I first started seeing what the stock market was all about, it looked like it was one big arena of numbers, which quite caught my attention. And it's been about 30 years now since the market first caught my attention, and over that time I've since become involved professionally in the market. It's been great being involved for almost 20 years now professionally. And over that time, I've noticed a big trend that I think is important for investors to consider. And that's what I wanted to talk about today. If you asked investors, 15 to 30 years ago, if they were investing in the market, and they said yes, and then you followed that up with a question of, well, what are you investing in? And back then they would have come out with, well, I own stock in this company and that company, and they would give you a list of the various different companies that they were involved with, that they owned shares in or that they were following. And if you ask investors nowadays that same question, do you invest in the stock market? If they say yes, then you say, well, what do you invest in? And you would, on average, with the average investor, you'd get the answer, well, I own mutual funds, or for the more venturesome, I own ETFs. And the problem that I have with that is, first of all, when it comes to mutual funds, only 20% of the mutual funds out there are able to beat the averages. That's not a very good record. Now, that's not a sort of a total condemning of the mutual fund industry. It is they are bound by certain rules and regulations, or a vast amount of rules and regulations as to what they can invest in. So in a lot of instances, their picking is kind of they're restricted by what they can get involved with. On the other hand, the average investor doesn't have that problem, and so right there is a reason that I think one would want to consider being a stock picker. Now, as I said, the other thing that's come around in the last few years is a lot more investors are getting involved with ETFs. These are exchange-traded funds. And basically what they do is they are designed to follow an index or match the returns of an index or commodities or other assets. And these ETFs, well, by nature, they are the average, so they're the ones that are beating the average. So if I was put a gun to my head and I was required to bet on one or the other, I would definitely be a ETF guy. But I think that the real rewards, the biggest rewards for investors, is to be a stock picker of individual companies. Those that are successful, if you look at the careers of the greatest investors of the last 30, 40 years or so, are people like Sir John Templeton, Warren Buffett, Peter Lynch, and these gentlemen, what sort of makes them stand out to me, I've read material from all of them extensively. In the case of Warren Buffett, I'm going to tell you what I've read from them, and it's a great place for you to go look to learn as well. And one of the greatest places to find information about sort of what goes into Warren Buffett's thinking is if you go to his website, berkshirehathaway.com, every year since the 60s, they do an annual letter to shareholders. And in there, he goes into great detail about the successes that he has had during the year, the failures, what he's learned from the successes and failures, and indirectly, he gives investors a great education in what it means to be a stock picker. Now, Sir John Templeton, again, you can search and find a great deal of writing about Sir John Templeton, and he was also an exceptionally good stock picker. Peter Lynch, who basically invented the mutual fund business, he was the first real big star as far as picking stocks goes, and the Fidelity Magellan is the fund that he spearheaded and really brought mutual funds into the awareness of the average investor. And so he wrote a great book called Beating the Street. And for a mutual fund guy, industry guy, this book talks a lot about how investors should look at being stock pickers, and that they are able to do it. One of the great examples is in one of the early chapters of the book, it's called The Miracle of St. Agnes. And in it, he talks about how a group of grade 7 students had a contest against a bunch of mutual fund managers, and that the students, these grade 7 students who stuck to companies that they understood, Coca-Cola, Disney, Microsoft, Intel, companies like that, far outperformed the professionals. And he makes that to emphasize how investors should be looking at things as individual stock pickers. The one thing, the great thing that I like about all three of those guys, whether you're reading stuff from Sir John Templeton, Warren Buffett, or Peter Lynch, is that they are very brilliant. And the one thing that I think sets them apart is that I've listened and watched and read a great deal from a lot of experts in stocks over the years. Some of them, I think that they are trying to overwhelm you with information, confuse you, which makes them feel more brilliant, if you will. The thing that I like about Sir John Templeton, Peter Lynch, and Warren Buffett is these guys are, how do you say? I don't want to say common sense, but they talk to you they write and they talk in a way that everybody can understand. And so those are high on my recommended reading lists of what someone who wants to be a great stock picker, those are the guys to emulate. And finding that book by Peter Lynch, or any writing by Sir John Templeton, or interviews and stuff from Warren Buffett will help give you a really good foundation in that. And so that's sort of the basics of the argument I'm making towards encouraging people to be stock pickers. I think that if you are good at it, and I don't think it takes a rocket scientist to be good at it. If you do the homework and you try to understand companies and you stick to companies that you understand, you can far outperform mutual funds and ETFs. And so I encourage people to it's a lot of fun to look into companies, try to understand them, follow them, and I've been doing it for close to 30 years, and I encourage everybody to do it. Now, having said all that, I wanted to talk about some strategies going forward that I think that will benefit the stock pickers out there. And some of those strategies are, first of all, you really want to do your homework to try to find solid companies. Solid companies to me are companies that have high assets that are being discounted by the market and have the potential catalysts to unlock that that value to the shareholders. And that's how you buy things that are bargains, and and hopefully gives you an opportunity to sell them at when more people see the value of the company, and you start to get good returns. And so that's the first step. I also think that because there is a lot of fear in the market right now, I've talked about this in a couple shows ago. You can, if you're watching this show on our website and you look above me, you'll see an ABR TV guide. And in that TV guide, we have an overview of each show, the dates, and a link to go watch those shows. And you'll find one, I think it was called Fear and Loathing in the Stock Market, and it talks about the high level of fear right now. And when there is that kind of a fear, I think that it really pays to buy the dips. So when the market gets overly emotional and fearful, you're going to see the stock market, various different stocks get beat down. That's a good time to be a buyer. When the rally happens, usually fairly quickly these days, there's a lot of volatility, ups and downs. Buying into those dips and then looking for the next rally and selling some into that rally, which helps you to build up cash so that you can buy the next dip. I think that we're going to see a lot of that up, down, buy the dips, sell into the rallies kind of a market going forward. And so I think that those strategies are what's going to pay off the most handsomely if your stock picking is good and you're disciplined. I think that that's a great way to outperform the averages out there and beat the market. On a general sense, I think that this is the best time for investors to be stock pickers. And the reason that I say that is at heart, I'm a contrarian. Those guys that I talked about, they're also contrarians. And the big trend that I opened with talking about how investors of the past were more stock picker type investors, where they had a portfolio of stocks of individual companies, not so much into mutual funds. I think that has been flipped upside down, and now investors are more into mutual funds and ETFs and less into individual stock picking. And so as a timing thing goes, I think right now when the bandwagon of stock picking is sort of empty, that's the best time to look at that strategy. And I think that in a general sense, that's also a good time to be looking at individual stocks when the bandwagon is empty. And so those are some things that I wanted to talk about today, and I hope that helps out our viewers that are watching this. That's a wrap on the commentary for today. Before closing, I like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own homework and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and if you like this video, we'd like you to pass it on and let people know how to find our website, our shows, our reports. Of course, we always like to also add some thank yous out there to, first of all, we use YouTube to produce and broadcast the shows, and they have a great website for anybody interested in doing online shows, and we highly recommend them. Also, if you're got a new setup on our website, so if you look to my left over there, you'll see our banners, and those banner sponsors are really important in us being able to do the work that we do. If you click on their banners, it'll take you directly to their websites where you can do a bunch of homework on those companies and find plenty of information. And so we want to thank those and invite you to check them out. And of course, to you, the viewers, if you didn't show up, we wouldn't have reason to do the show. So thank you very much for tuning in. On that note, you can find all of our work on our website at allenberryreports.com. We hope to see you soon, and have a great day.